Hey, Andrew Malcolm here from Mortgage HQ, and I want to share with you the biggest lessons I've learned through recently buying a business. Now, why did I buy a business? Well, firstly, there's a 15% return on my initial investment. That's without debt, and that's without me adding anything to the value of the business through better operations or slicker marketing, anything like that. And the second reason is I like to do something with my dad, so it's more of a family investment, and I get to work on a slightly different business models than what I've been doing recently, so I'm really excited about that. Now, how did I come about buying this business? Well, I reached out to the owner of the business a couple of years ago, expressed interest in his industry and learned about his business, and I offered to buy half the business when he was ready. And we spent the last sort of 18 months getting to know each other, building a relationship, and I was learning about the business and giving him insights on how I could add value. And through buying half the business, the reason he was happy to sell half to us was the value added that we could bring. So we saw that 1 and 1 made more than 2, so we're both excited, firstly about a fair value for the business where it currently sits, given we think the future value can go up. And the returns, given the risk involved, are a bit higher than they would be for, say, property or other lower risk investments. So through that higher risk, you expect a higher return, and that's what we're planning for. So what did I buy? I bought a relatively simple chemicals import and distribution business that's been around a lot longer than I've been on the planet. So it's a very established and relatively simple business that I'm looking to grow the client base, grow the revenue streams through addition of staff and expanding the SKUs. And the real awesome thing is the business is quite close to where I go to the gym. So the lessons I've learned there are, if you're looking to buy a business, try not to invest outside of your competency, because this chemicals business, I've worked in dangerous goods before, so I'm not scared about working with dangerous goods. I've done logistical stuff, that's my family business side of things, so it's nice and simple based on my experience, and especially with my old man involved, our level of competence in this space is definitely good enough for this business. So I've looked at I've probably looked at 100 business opportunities in the last 2 years. I've looked at businesses that were relatively far away, they were a lot more complicated, the people involved were a bit more, I could say I wasn't as trusting in all scenarios and circumstances with those other vendors. So one of the biggest lessons I got to say is, if you don't trust the existing owners or the vendor of that business, I would walk away from the deal. And if it's not convenient, and if it's not a business that you easily understand, instead of getting excited about the numbers, generally speaking, unless you've got some sort of advantage, I just wouldn't go there. One key thing I want to talk about is deal structure. The accountants and lawyers that were involved in getting this deal done. If we step back from the whole deal, the accountants and the lawyers didn't really help that much. They kind of pushed paper along, and they were contributing to getting a deal done. But relatively speaking, the lawyers involved on both sides were not really that excited about getting a deal done. Show me the money! They didn't come across as being investors themselves. So one of the biggest mistakes I made probably right at the beginning was using my family lawyer. No doubt she's done awesome things in the past, and being a partner at the firm, no experience is there. But I think for this particular transaction, definitely next time I'm going to be picking a lawyer that I'm a little bit more comfortable dealing with, especially on the business side of things, and one that's actually excited about getting a deal done, instead of what I felt was from both lawyers' side of things, trying to protect themselves from poor advice or a poor transaction coming back on them later. It's the same with the accountants. So accountants by nature are very analytical, tend to be more black and white and less excited about the intangibles or about the intrinsic stuff. So one thing that was, when you buy a business, you can kind of go down 2 rabbit holes. You can buy the assets and create a new entity for the ownership of that, or you can buy the shares in the existing business and have some continuity. Now, there are circumstances where establishing a new business is going to make a lot of sense. In this case, for this business, I felt quite strongly, based on the pros and cons, that buying into the existing entity made a lot of sense. I had some very strong reasons for that, which have proven to be very, very true after the fact. And both accountants were initially, and the lawyers, pushing for a new entity to be created. And if I had trusted their advice, there would have been a lot of upside that we missed out on. And it would have created a lot more complexity, potentially a lot of cost. And once the business transaction had happened, the work that I would have been doing would have been in getting this new thing kind of up to a point where the business already is now. So just take it with a grain of salt, the advice you get from accountants and lawyers. Yes, they have degrees, yes, they have experience in their field, but in terms of understanding the whole deal and all of the working parts, you've got to trust your gut. And if you know what you're doing and you're well researched and you feel like you've got a handle on things, through your due diligence process, you can take advice, take in what experts are saying to you, and you can choose to ignore it, or you can give reasons of why you're not going to follow that advice. Trusting your gut, especially when you know the industry and you feel like you've got a good handle for the transaction, is definitely something that I'm going to continue to do over and above hearing a black and white answer from an accountant or a lawyer and running with it. Now, after the transaction was done, just because we've got nice spreadsheets and we've been doing a lot of high level stuff, doesn't necessarily mean that 15% return comes easily. Because I'm now a director of the business, there's things like staff, stock levels, further capital investments that need to be made. There's regulatory stuff that we were working on. When you're buying a business, you tend to not be completely passive. Just like when you buy a property, there's things like tenants and repairs and things to do. Now, in theory, I could try and put somebody else in there, and that's going to cost money. But I'm enjoying being involved in the business, and I'm excited about the returns it's going to create. 2 years to get the deal done, a lot more complicated than a property transaction, but I feel like with 100 pages of legal work, probably 50 pages of financials across all of the 4 or 5 years we analyzed, relatively speaking, the experience I've gained through doing this transaction is going to help significantly with future transactions for property, for business, because I'm not going to be as overawed by the detail, because this was a very detailed process. So if you've got any questions about buying a business, or buying a business using home equity, or in this case I bought half the business, so if you've got any questions about part transactions and a transition or succession plan in the business you're looking to buy, leave some questions in the comments below and hit subscribe. Happy to chat about business and property, because investing is not just about property, it's about some diversification, and buying a business can be a good way, especially if you have not been in business before, for you to start getting yourself out of working for a salary and working for an uncapped gain that is probably going to be bigger than property if you buy the right business.